Good afternoon, everybody. Welcome to RadioSilentPlay.com. I am your moderator for today on Sunday, September 21st, 2014. Okay, let me start off by saying I'm not a financial advisor. Please do your own due diligence before trading any stock or options. Trading stocks and options require lots of risk. Okay, thank you all for joining me today. Actually, I'm going to be posting this video. It's a one-on-one seminar with one of our members. Okay, I have the pleasure to be speaking to Sniper 999. Okay, so I just want to welcome him today with his first one-on-one webinar. What we will be discussing today, okay, is pretty much website functionality. Okay, what to expect when using the website. Okay, and I'm also going to briefly discuss how to place a buy and a sell, and also we're going to discuss briefly how to look at charts and what are exactly our buy zones, pivots, and certain setups. Okay. Okay. So what we have here is pretty much the Radio Silent Play website. Okay. We have the home. Okay. I the out here talking about what the market is doing, pretty much what the economy is doing. Okay. I recommend to look at this because it's very important to understand what inflation is, along with the CPI inflation index, and also actually joining the website. It's not only to get it's not only to get certain option setups. There's also a lot of education involved. Okay, with it. So, um, what we like to give our members is a brief description of what the markets are doing. If we understand what the market trends are, we can pretty much forecast, where the market trends are, what kind of stocks we can actually start looking at to buy, and also setups. Okay, so I have the pleasure to be talking to Sniper 999, and I just want to ask you a couple of questions. Have you ever traded or ever invested in the markets before?
No, I haven't.
Okay, so this is pretty much a first for you. Okay, so
Yes.
in regards to your job, okay, do you tend to save money? Do you tend to put it away in maybe a CD or a 401k or some type of a pension?
Pretty much savings account. I mean, I do have my pension, but there's only a certain amount that you're allowed to put into it. Everything else
Right,
you're pretty much on your own.
right. So I mean, I'm sure that you're aware of pretty much the federal manipulating the U.S. dollar. So what happens is with a lot of savers right now, a lot of people don't understand, but interest rates are at artificially low, the lowest possible interest rate that you can possibly get. So that'll help people that want to buy houses, okay, but people that put away their money into a savings account, into a CD, into a pretty much a money market account, they're not making any type of interest on that money saved. Okay, so not only does your money not do anything for you, but when you go to work, okay, I don't know what you work in, but a lot of people don't get pay raises. Okay, so along the time, okay, what happens is you get a hidden tax, and the hidden tax, what it is pretty much inflation. So when you go out to a store and you're buying milk, okay, instead of paying $2, that which you were paying about 2 years ago, now you're paying close to $4 for the milk. So it's not necessarily that the shopkeeper is charging you more for that milk, but actually the price of the milk goes up in regards. So this is very, very important for people to understand. Now, with that said, okay, what we have here in Radio Silent Play is we teach people, okay, or we educate people how to make money work for them. Okay, I don't know if you've ever read books or any financial magazines or any of that sort, but there's books that you can actually read, and it pretty much gives you a basis or a basic understanding of what the markets do. The only problem with these books is that they're usually really, really big, okay, and there's a lot of information in there, okay, and it gets diluted and people get afraid, they get intimidated. Now, what we do is we pretty much give from beginners, okay, to intermediate traders and investors pretty much a simple layout, okay, on the website. And what I do here is I pretty much give traders the opportunity to do a one-on-one mentorship, okay, and also look at some of the postings that we do, okay. Now, I just want to, explain there's a little bit of a difference between a trader and an investor, okay. Trading, okay, is where you buy something of value, okay, and you want to sell it for another value, okay. So you're not going into these stocks longer term. So do you understand that concept? Okay.
Yeah.
Um, I'm gonna go over a couple of things. And I if you get a chance, I want you to kind of focus on some of this down because it's very important. Okay. Um, you don't have to write everything down in verbatim, but I just want to explain to you a little bit of some of the things that we give out to our members during seminars and webinars. Okay, and it's a little explanation of what the rich do. Okay, and I call it the secrets of the rich. Okay, the secrets of the rich is pretty much their way of life, how they invest, how they trade, and how they make money. Okay, when you go to school or any institutionalized education, they're not going to give you this information. And the reason is that the information is because you become competition to them. Okay, if you're working in the work paradigm, you're paying taxes. So you're pretty much supplying either the government or their business. And the thing is that if you're competing with them, you become a competitor, and they just don't want you to know some of these things. So I call this the secrets of the rich. All right, and number one of the most important parts of secrets of the rich is having a mentor. All right, now let me ask you a question. I don't know what type of a job you have, but have you ever had that one guy where you can pick up the phone and call him up and say, hey, look, listen, what do you think about this?
No.
Okay, so it's very, very important. Now, do you know who Warren Buffett is?
No, I don't.
Okay, Warren Buffett is an investor. Okay, that's pretty much one of the biggest investors that's that that's invested here in the United States. He's a multi-billionaire. He he's one of the biggest success stories that we have here, and he's still trading now. He has his own firm, and he had his own mentor, and that mentor of his was Benjamin Graham. So one of the things that helps people, okay, is having that person that you can rely on. Now, I'm not a financial advisor, okay, nor a broker. I can't really give advice, but I can pretty much give you some type of education where you can decipher it and you can use it to your advantage. Okay, so mentorship is very important. Okay, when it comes to investing, trading, or any type of education that you're gonna get. Because when you have this mentor, if you have a question, okay, if you have a scenario, you can always ask, hey, what do you think about this? Okay, what do you think about this? Person will pretty much put you on the path. And they're not going to tell you specifics, oh, buy this, buy that, because they have to follow SEC and FINRA regulations. But at the same time, that's somebody that you can email or you can send that person some information and you'll get information back. And there's dialogue there. Notice a lot when you get a broker for yourself, whether it's Charles Schwab or whether you're getting an investment advisor. What happens is they don't give you the information that you kind of need to know. All right, because the thing is they want to make their okay, so they can tell you, hey, look, listen, go long on the S&P 500, okay, or buy these certain stocks, but that's that. You know what I mean? So you sign a contract, you're paying these guys, but they don't even care whether you make money or not because they're still getting paid. Okay, so that's not considered a mentor. All right. Another thing is that the rich invest pretty much no money to little money, okay, to make maximum returns. Okay, so write that down. Okay, that's called the law of infinite return. Okay, so what rich people do is other people's money, or they use the smallest amount of money to make the most amount of money. So they're very, very cheap. Okay, I don't know if you understand the difference between options and stocks, but when you buy an option, you're buying contracts or a down payment with the littlest amount of money. Now, what I want you to explain is when you see stocks like Apple trading at one point 600, 700, it's very difficult to buy that stock, okay, in large sums, because if you're buying, let's say, 20 shares, okay, 20 times 700, okay, that's close to you know $14,000, $140,000. Okay, so we don't have the kind of money. So the issue is that when you buy these stocks, you can buy options, and I'm not going to go too in depth in that, but those are called derivatives. Okay, so many of these big firms, these big investors use derivatives. Okay, another thing that they do is diversification. Okay, they pretty much invest in different things. It's not only stocks. Okay, it's not only bonds. What they try to do is they invest in tangible assets such as uh, businesses. Okay, like venture capitalists. I don't know if you ever saw Shark Tank. They invest in businesses. They buy real estate. Okay, so what I want and is it's not all about putting all your money into stocks and options. Okay, this is just an avenue so you can and pretty much learn and educate yourself. All right, so this is pretty much very quick, a quick description of what we bring to the table when we're giving you this information. Okay, so any questions on any of the things that we've covered? I mean, that was pretty brief. Get that mentality, all right, because the thing that you need to know is you want to be less emotional when trading stocks. Okay, so what I want you to understand, if you're going to go about investing or trading, I want you to take money that you can afford to lose. Okay, take money that you really don't have that much ties to. Okay, because that's going to make you a more sound investor. And why do I say that? Because now if you're putting $500 that you really don't care about, and that money is making money for you, then in the longer term, you're going to leave that money in there, continue to grow it, and you're not going to be afraid to lose it. Okay, so I want you to really understand that concept, help you grow and become a better trader. Okay, so any questions on any of that stuff I've talked to you about? But
The pretty much what the difference between the investor and the trader. Um, which one's better as far as making money?
okay, so that's a question that now I could say that a trader, okay, does much better than an investor. And why is that? If you notice in the 1970s, 1980s, you could have bought in anything, and that stock would have gone significantly higher. But now the point is that we're at a market peak, so you don't want to go long on a stock, okay, if the stock is at its highest price. Okay, so the difference now is, okay, you're gonna have to do a lot of homework, okay, to go long on stocks. Is there opportunity with stocks to go long for a duration of time? There is, but now it's like throwing a dart, okay, and hitting the target. So it's gonna be a little bit more difficult. Now, back in the 1970s and 1980s, you could have bought anything, and I'll give you an instance. It's like you throwing a dart at a wall, and you would have made money. Okay, now you have to be a little bit more careful. Okay, so you can still do long investments, but you have to do your homework. What stocks are going to give you pretty much dividends? that if you own it a certain amount of time, they give you extra shares free, okay, and you get extra money for holding that stock. Okay, so dividend paying stocks like Coca-Cola, like Walmart. Okay, so there's that are sound. Okay, but at the same time, when you buy these stocks, you have to put in a significant amount of money into these stocks. So I would say that trading, okay, will bring you faster gains. Okay, it will bring you a little bit more opportunity to make more money quicker. But at the same time, anytime that you're purchasing and trading a stock, you're gonna have to pay higher taxes, which is I believe that um, right now the taxes are about 30%. So when you hold a stock less than 6 months, okay, they give you a capital gains tax of about 30%. Now, do we have long hedge investments here on our site? Yet we do, and I'll go over and I'll show you what those stocks did from the times that I did it. Okay, so um, I recommend that if you do trade and you make money, you can do is when you make profits and you make a substantial amount, now you can take that money and you can start buying certain companies that are pretty good companies at the best price. And I'll show you, where you can find that on the website. But overall, I think that if you can trade, I think trading right now, based on what the market trends are right now in 2014, I think trading is most significant way to make money. Okay.
Okay. Got it.
All right. Okay, so I'm gonna go over the website. Okay, first off, you have the login here. Okay, can you see my pointer?
Yes.
Okay, so this is the login. Okay, I'm already logged in. Okay, I have pretty much a daily market report, and the daily market report pretty much is big boards stocks like what the S&P 500 are doing. Some out, um, different companies like Sprint here. Okay, Sprint. I like the stock. I gave it to people at $5.50, and that stock never broke that level. So let me explain to you what you're seeing here. First off, okay, this is a daily chart. Okay, this is pretty much what the stock does. Every candle will signify a day. You see this big red candle here? This was on the 18th. This one will be on the 19th, and this one will be on the 20th. Okay, so there's different types of charts that you'll see, and I want you to look at this. Can you see my screen? Are you
Yeah.
able to see my screen? Okay, see how this chart, okay, says weekly. This one says daily. If I change it, now I have daily. Okay, and each bar signifies, okay, the day's trading. Okay, so each bar signals a day's trading. So now you see this big white candle here.
Yeah.
Okay, what date would this be right here? This big white candle.
August 11th.
Yeah, it would be August 11th or the 12th. See, because it matches up right here with the chart. Okay, so that's
Yeah.
pretty much your basic chart. Now, if you come over here, this is the weekly chart. So what do you think each candle represents?
Every week.
Exactly,
No.
every week. Right. This one's week, the week of August 14th. I'm sorry, the week of December 14th. You see this red candle? If I line it here, this is the week of the 14th. Okay. So when I look at these charts, what I usually do is I pay more attention to these dailies. Okay. And why is that? Because I care more what the stock is doing during the day. Now, if you're a long-term investor, okay, you're gonna worry about what the week does. Okay. Now, I'm gonna talk to you about what market trends are. Okay. These are patterns of what this is doing. Now, if I ask you, okay, do you think that the market trend on this stock is in an uptrend or is it in a downtrend? What would you say?
Uptrend.
Okay, right. Because if you look at this, okay, each time it's going higher. If I put a line through this bottom all the way up here, okay, you see that the stock is in an uptrend. And if I put another parallel line here, okay, the stock is this is what the S&P 500 is doing right now. Okay, the S&P 500 is pretty much all the best businesses that the S&P has or in the United States, and they have it in what you call funds. Okay, and this is what the market's doing right now, and this has been going up since back in January 2013. Okay, if you go back on the monthly, it has a significant uptrend. Okay, so understanding that is okay, it's going to give you a pattern now. If you know that this stock is going up, okay, you feel confident in holding longer term. Okay, so now I want to show you something else. I want to show you a different, and you tell me what kind of a trend this is. Okay, right now, if you look at this chart, what do you think this chart is? Is it an uptrend or is it a downtrend?
Uptrend.
Okay, uptrend. That's correct because if I come over here and I connect this pivot low, you have a significant uptrend. But see, the steeper this line is, the steeper this line is, the more parabolic it's going, okay? And the more likelihood of this stock hitting down back to this trend line. Now, if you look at here, okay, this is called the relative strength. This shows when a stock gets to this level, that means that it's an overbought condition, meaning a lot of people are buying at high prices. Okay.
Okay.
So would you want to buy a stock when it's here or when it's like down here?
Down.
Right. And why is that?
You're getting it cheaper to sell it for a higher price.
Exactly. So a good time to buy this, and this is what I tell my members, but a lot of members don't like doing it, is to buy when it's down here, and that would have been right here. Okay, so I like when stocks are what you call oversold, where a lot of people are panicking. Warren Buffett said it best, okay? You buy the fear and you sell the greed. Now, you see this? This is called the UUP. This chart, okay, signifies what the US dollar is doing, okay? So the UUP is signaling what the US dollar is doing. So right now, the dollar is very, very strong right now. This is the strongest that the dollar's been in the whole year. Okay.
Okay.
Now, what does that mean for the markets? The markets have what you call an inverse relationship to the U.S. dollar. If the U.S. dollar is strong, okay, the markets usually are weaker because a lot of people go cash. But now, right now, what we have is what you call a divergence. A divergence means when two entities, okay, or two markets are trading in that same direction. Okay, on the usual, when the dollar is strong, the markets, okay, are weaker. But right now, if you see the S&P 500, it's trading at its all-time highs. Okay, so that's signaling that something's up. Okay, I'm not saying that something's wrong, but something is up. Right now, you have to be extremely careful either holding the dollar because it may hit that overbought condition and it may come down, or the market may pull back. So, as an investor, okay, I would be very, very um, how can I tell you? I would be more alert on whether holding stocks into the next year. Okay, because you don't want to hold if you have a stock and it's at a nice price and if it's at the high of the year, you want to be able to take profits out of that. Okay, you don't want to be greedy because like Warren Buffett said, remember, you want to buy the fear and sell the greed. Right now, okay, the markets are in euphoria right now. Okay, now I'm gonna come and I want to show you okay, in the weekly, and tell me what the trend is.
Mm,
Okay, what do you think the trend is on the dollar right now?
I
Is it
don't
in an
know.
uptrend or in a
Well,
downtrend?
yeah, towards the end is uptrend.
Right, right. If you come over here, you see that? It was in a downtrend. This channel was in a downtrend, okay? But now, if you look, it broke that uptrend right here. Once it broke, okay, 2160, it broke out. So now, get this, brother. I want you to look at this. If I connect this pivot top with this pivot low, this was resistance here. Okay, this is what I call resistance. If I connect this pivot high to this pivot high, okay, that's considered a downtrend as well. But look at right here on the US dollar. It just broke it. So this is extremely bullish for the dollar. But now the next the next level it needs to break is this 23 level. Okay, so if it hits this level here and breaks out higher, then what we have is a bullish move on the US dollar. Okay, so what I want you to understand is when it breaks these levels, okay, when it breaks these resistance levels, that means that the stock or the ETF is stronger and it has the likelihood to test new resistance. Okay, but this is considered right here a very strong resistance. Okay, now I want to explain to you what these charts are and what they mean. Okay, if you see this, it says MA50, MA20. If you look at this MA50, okay, that's this blue line here. You see this blue line here?
Yeah.
Okay, that blue line says that this stock, okay, is averaging the average is 2160 in 50 days. Okay, this is very important, and I want you to understand this. And let me know if you have any questions on it.
Okay.
This chart is saying that the U.S. dollar or this stock within the 50 days, the average price is $21.60. Okay, what we want to understand, and we want to understand what moving averages are, is if this stock is trading above that $21.60, this acts as support. Okay, now I'm going to make an analogy. Okay, firefighters. Okay, firefighters are in a building. Okay, and there's a fire. Okay, and the strongest floor in that building is, let's say, the fifth floor. Okay, so typically, if you're a firefighter and you're fighting a fire, okay, where do you want to be if the building's on fire and you don't want the level to break, you don't want that floor to break? Where would you want to be at?
The strongest floor.
The strongest floor. Okay, and that strongest floor is the fifth floor. Okay,
Yes.
now the fifth floor, what is the fifth floor here? MA50, the moving average. What is the strongest level here to buy this?
The 21,
20.
2161.
Right. So where do you want to buy this stock? As close as possible to that 2160. Okay,
Okay.
because that's the ground floor. You understand me? So
Yeah.
now, if this pulls back, right now it's $22.55. Would you buy this over here?
No.
No, because you want to buy it as close as this $21.60, correct? Because
Yeah.
you want
But
to
then
you
I'll
want to
be
buy it you
overpaying.
want to right, you want to buy it at the cheapest price. Okay? So this is very important. When you look at charts, I want you to look at the 50-day moving average and I want you to look at the 20-day moving average. Okay, the 20-day moving average, okay, if you see this red line, you see how it's red?
Yes.
Okay, it's a little bit hard to look at, but that's the 20-day moving average. And where is the 20-day moving average right now?
Is that 2160 between 2161 and 2168?
Right. Okay. So that's very important. So write that down. When I look at charts, I want to focus on the 50-day moving average and the 20-day moving average because typically I want to buy the stock near that range. Okay.
Okay. Now, are these the only charts you have?
No, I'm going to show you. I'm going to show you other ones, and I want you to understand. The only time, write this down. The only time I want to buy the stock near the 20 and 50-day moving average is when the stock is trading above it. Okay, so right now this stock is trading above the 21 and the 20-day moving average and the 50-day moving average. So whenever a stock is trading above it, see how it's trading above it?
Yeah.
The 20 and 50-day moving average is support. It's a support line. Okay, so write that down. Now, remember what I told you about this? This is called the RSI. See this? It says RSI. This is called the relative strength index. Okay, whenever the RSI is above this 70 line, you have to be careful because this right here means that the stock can be overbought, meaning that there's the highest price and there's more buyers than sellers. Okay, and usually, typically, okay, this is a point where the stock, okay, can't go any higher. Okay, now does it go higher sometimes? Yes. Okay, but usually over here is a signal to myself not to buy at this range. Okay, other people have different strategies. Some people like buying into these rallies. Me, for me, okay, I consider this a probability trade. And the probability of this stock going higher, okay, is lower than the probability of this stock going lower. You understand me? I don't want to confuse you. If this thing, okay, or if this stock is trading above this 70 RSI, the probability of it going higher is less than it going down. You understand what I'm trying to tell you?
Mm-hmm.
Okay, good. So now I want to show you another chart where it's a little um okay, so look at this chart right here. This is the sprint chart. Okay, I'm going to show you the weekly chart because it just broke above the moving average. Okay, so if you look at this, look at the moving average right now. The moving average right now, the 50-day moving average is at $8.07. The 20-day moving average is $7.68. Okay, so now I'm going to connect this pivot low to this pivot low. Okay, now back in January, this was in a nice uptrend. You see this? This used to trade at $2, and then it traded as high as $11. This is the Sprint chart, okay? The Sprint Corporation.
Okay.
Now, do you see in January of 2014, you saw what happened to the stock? What happened in the stock? The stock broke. It broke below this trend line. You see that?
Yes.
Okay, when it broke below this trend line, the stock collapsed. Okay, so I want you to understand that when stocks are in a trend line, they have to hold trend lines, because if they don't, they break down. Okay, you see this trend line? It was trading in this channel right now. Now, in January, it broke down. Okay, and people were trying to find the falling knife. This was just falling. Okay, when it got to $5, it held. You see that? It held the $5.30 range. Now, if this stock closes below below $5.30, what do you think is going to happen? If this stock closes below $5.30, what do you think is going to happen?
You should buy.
Okay, now I want to make you understand this. Okay, this is right now a support level, but it's not very strong. Okay, so if this stock closes below $5.30 two times, guess what's going to happen? People are going to be afraid to buy it at that range. And if it does break below that $5.30 two times, it's going to go lower. Okay? Because these charts represent emotions. Okay? It's showing where there are buyers and where there are sellers. Right here, if you look here, all this red part means that people are selling. Okay? Because the panic is in. The people that were buying here, okay, sold for profits. They sold for profits over here because they said, you know what? I bought this at $2. I'm going to start taking profits because now it's breaking down. I'm not going to hold it for long anymore. Some people will hold it and they'll lose a lot of profits all the way back down to $5. Once it breaks $5, now they're like, oh man, I gotta sell this because it may go all the way down to where I bought it. Okay, so this pretty much is telling you or giving you emotions right now. It's telling you what the emotions are showing with the people that own this stock. Okay, now you see the 50-day moving average and the 20-day moving average. Right now, this is where the stock is trading, right here at $6.88. Okay, now instead of the 50-day moving average and the 20-day moving average being support, now it's resistance. Okay, now let me explain to you why. Because within the 50 days, the average price is at $8. Okay, now a lot of people bought at this price. Okay, so think about all the people that bought around this range, at this $8 range. It collapsed, and now it's going to get back up to $8. What do you think those people want to do?
Sell.
Right. And why is that? Because they bought it at $8.60, and now it's going to hit $8. They want to break even. Okay. They don't want to lose that much money. And emotionally, when you look at your account, and let's say you bought $5,000, $10,000 worth of Sprint, and it collapsed all the way down to $5, you're nervous. So the first thing that you're thinking in your head, oh man, if Sprint goes back to $8.60, I'm selling it. Because you bought it up here. You bought it at the market high. Okay? So now, instead of this becoming support, this acts as resistance. Now, do you understand that concept?
Yes.
Okay, good. Good. So now, when I sent this stock out, I told my members to watch the $5, okay, the $5 mark. And why is that? Because I wanted to buy it cheap. Now, what did we talk about the RSI? What did I say about the RSI? When it's at these levels, what did I say we should do?
Just to buy.
Exactly. And why do we buy it?
Because it's going to go up. The trend
It's
is
not.
going to go up.
No. Well, it doesn't mean that it's going to go up. It means that the probability of the stock going higher, okay, is more than it going lower. You understand me? This is showing us probability. Okay, when it hits this level, it can go lower, but the probability of it going lower is less than it going higher. So what I teach my traders, okay, to do is to practice the law of probability. Okay, this isn't gambling. Okay, but you have to treat it. If I'm going to invest or I'm going to trade, I want the probability to be on my side. Now, it's like you going to play blackjack, okay, at a table, right? If you're going to play 10 times, okay, what's the probability of you losing? Okay, compared to playing 2 times.
What is it, 5?
Right, because now if you're playing 10 times, you can lose more times.
Yeah.
Because if you play less, the probability of you losing, okay, is basically 2 times. Okay, so when I teach my traders, okay, how to trade, I tell them to take the best possible trade. Okay, so I'm gonna get out of to small cap buy zones.
Now,
Setup. Okay. Now take a look at this chart. Let me know if you can see the chart. August 14th. Okay, August 14th. You see the date right here, right?
one moment. Yes.
Okay, August 14th. Sprint was given to members at a buy zone $5.50 to $5.80. Now, what we talked about, this is the RSI. The RSI was below this 30 mark. It was at 2168. So now, I'm going to ask you a question. Do you think the probability of this stock to go lower, is it higher to go lower or is it higher to go higher? What's the probability of this stock? Okay, I want to ask you, do you think this stock has the higher potential to go higher, or does it have the highest potential for it to go lower than what the price is right now, $5.71?
Has the probability of going higher.
Right, because if we look here, the RSI, or the relative strength index, is trading below 30. Okay. Now, you see this box pattern? I put this box pattern because right now this is called a consolidation period. This is a daily chart. So each day the stock is trading within this box pattern. So the way I got this $5.50 mark is, if you look, August 11th, the lowest this stock went was $5.50. So typically, your best entry is at $5.50. So let me show you. If I come here and I place Sprint here, you see Sprint? I type the S in that search box. Okay, and this is E-Trade, by the way. This is the E-Trade broker. Okay. Now, if I want to buy this stock, okay, August 14th. Let me do this again. I'm sorry. Okay, so this is a sprint trade. So place this. I'm gonna place the symbol here. Okay, you see where it says sprint? I'm
Yes.
gonna go to it. Okay, and this is the sprint layout. Okay, so let's pretend that this is August 14th, and we want to buy. Okay, I'm gonna come here, and I want to buy sprints. Okay, and I'm gonna put. Bear with me. I'm gonna come here, and I'm gonna buy 100 shares of Sprint at, well, let's do a little bit less. Let's do 20 shares of Sprint at $5.50. I'm gonna come here. I'm gonna hit good for 60 days, and I'm gonna preview order. Okay, see how it's $119?
Yeah.
Okay, then I'm gonna hit place order. Now, whenever I trade, this is just a mock-up. I just want to show you how you place the trade. Whenever I trade small caps, understand that trading $119 worth of shares is not going to be much. Okay? So I want you to understand that concept. Okay? Small caps, typically what you want to do is you buy a good amount of shares. Okay? So
I'm sorry. Small caps is you're buying what is it, like penny stock or?
no, small caps are not penny stocks. Small caps are any stocks that are like trading um, in either the Nasdaq, or they're trading in the the exchange. So if the stock is trading above $5, they're considered small caps, right? And some small caps sometimes trade in 50 cents, 90 cents, a dollar. It just depends on what the small cap is. It's just trading on either the Amex or on the Nasdaq. You understand me?
Okay.
So here I would be buying 200 shares of Sprint at $5.50, and it's good for 60 days. So if this stock hits $5.50 within the 60 days of me putting this this order in, it would automatically buy it for me without me being in front of the computer. Okay? So I want you to understand that. Okay? So I would hit place order here. Okay, and then it's good. You see this? Then it's good. You understand me? So I want you to understand how you place an order. Okay. If I want to remove that order, I'll come where it says view orders. Okay, and then I'll hit right here, change it. Let's say I want to buy 400 shares, 400 shares at $5.50. I'll hit preview order. Now it's $2,209. You see it?
Yes.
And then I'll hit place order. Okay. Now let's go back to the layout. Okay, so this is telling you that you're buying $5.50 to $5.80. What you as a trader want to do, you want to buy it as close or cheap as possible. Okay? And now your target is going to be $6, which is this level here, $6. And your target 2 will be $7. Okay? It's up here at $7. Now, this is very, very important. A stop. Okay, stops is, so if the stock goes the opposite way or goes the wrong way, okay, you don't lose all your money. Now, what does a stop mean for me? If the stock closes below $5, okay, on 2 consecutive days, I get out with a small loss. Okay, do you understand what I'm trying to tell you there?
Yes.
Okay, so let's say you come over, right, and you bought this stock on August 15th, okay, and you buy it at $5.50. Now, come August 20th, the stock closes at $4.90. Okay, what is that telling you? What is that signaling to you?
To get out, to sell.
Right. It's giving not to sell on that very first day. Okay, not to sell on that very first day, but at the same time, it's giving you that warning signal. Now, let's say if the stock the next day closes at $5.20, are you going to sell that stock? So the day before it closed at $4.90, and then the day after, it closed at $5.20. Do you sell it?
No.
No. Okay, because it didn't close below $5 on 2 consecutive days. Okay. So now another question. Let's say on August 14th it closes at $4.90. Okay, and then on August 15th it closes at $4.95. Do you sell it?
Repeat the question one more time.
Okay, you buy the stock on August 14th and you buy it at $5.50. The stock then closes $4.90 the following day, okay, on the 16th. And then on the 17th, the stock, closes at $4.95. What do you do as a trader? So one day it closes at $4.90. The next day it closes at $4.95, and you bought it at $5.50. What do you do as a trader?
I'll hold it.
Okay, but remember, your stop close is below $5 2 consecutive days. It closed
That's right.
below $5 2 times. Okay, you have to get out. Okay, and why is that? Because you have to manage your risk. You understand what I'm trying to tell you?
Yes.
Okay, now I want to go over this sprint trade. So on August 14th, I send it out at $5.50, right?
Mm-hmm.
Okay. Now let's go to the sprint chart. We're going to go to the daily. I sent this stock out on. If you look here, this is where August 14th was. You see this? Okay. Now this was the box pattern. This hit a low of $5.30. Actually, $5.36 on August 18th. You see that? On August 18th, this hit at $5.36. So our traders could have added shares right here at the lowest price. Now look what this stock did. It consolidated, okay, and then right here it broke above this box pattern. And this is what I call a pivot. Once the stock closed above $5.80, it broke the pivot. And it did it 2 consecutive days. 1, 2. See, this is a day and this is a day. This meant a breakout. And now it's trading above what? What is it trading above? The 20 and the 50-day moving average. So what does it mean if the stock is trading above the 20 and the 50-day moving average? What does that mean to you?
It's on the upward.
Right. And it's holding support. Now the 20 and the 50-day moving average are support. Okay. Now let's go back to my setup. Did we hit target 1 of
Yes.
$6? Did we hit target 2 of $7?
Yes.
Okay. So now do you think that the stocks that I give you, do you think that the probability of these stocks going higher is better than them going lower based on the information that I've given you on these charts?
Yeah.
Okay. So we don't care about fundamentals. We don't care if Sprint, okay, is going bankrupt. We don't care if they just said that Sprint, something bad happened to it. All we care about is these charts. Okay. This is stock. DNDN. I'm going to show you this. August 15th, DNDN. Where are you going to buy this stock?
Between 120 and 130.
Okay, between 120 and 130. Okay. Now, I'm going to ask you another question. If this stock closes below 110 two times, what do?
Get out, sell.
Okay, good. Now, the stock is trading at $1.50. Do you buy it?
No, because you should have bought it at between $1.20 and $1.30.
Okay, great. Now let's take a look at this DNDN chart. What date was this out? August 15th, 2000. Right. Okay, so August 15th, 2014. All right. It was between $1.20 and $1.30. Okay, let's close this up. Let's come over here. Now I gotta find my trustee.
Now, let me ask you a question. Before, let's say we hit the first, target 1 and we hit target 2, do we hold or do we sell?
Targets are usually prices that I want traders to start looking to sell. And why? Because we want to make sure that our traders profit on the way up. Okay? Remember, we're not investors, we're traders. So once our targets are hit, okay, our targets are hit. Now, if you don't sell at the target, it's totally up to you whether you want to sell it or not. Okay, but let's go over the chart. So your entry was at $1.20, $1.30. Okay, so let's go over here. This was August 15th. Okay, so right there is $1.30. You see that line right there? That's $1.30. Yes. So we sent this out on the 15th. Would you have been able to add shares here? Look at the line. That's $1.30. Did it ever hit $1.30 when I sent this out?
I don't know.
Right here. Look at between 18 and the 25th. It hit right at $1.30 right here. Between the 18th and the 25th. It hit $1.20. $1.30, I'm sorry. Actually, it hit a low of $1.28. Okay? So this is where you were buying. And look, let's look at the RSI again. What do we talk about the RSI? What is that considered? Is it overbought or is it oversold?
That is...
Okay, if it's trading above here, that means that it's overbought. That many people are buying it at a high price. Okay, so this is overbought. Okay, I'll put this right here. OB, overbought. And this right here, what would this make it? Is this overbought? Okay, good. Oversold. This is oversold right here. Okay, so where do you want to buy this? Do you want to buy this overbought over here? Would you want to be buying this stock over here? Or would you want to be buying this stock? Right.
At $1.38.
Beautiful. Beautiful. So you want to buy between $1.28 and $1.38. Now you're confident because we just sent you this stock on a Sunday watch list, and now you're confident in buying. Okay, so now let's go back to our setup. DNDN was an entry between $1.20 to $1.38. The stock hit $1.28. Okay, you were a buyer at $1.28, and now let's take a look. What happened on September 15th?
It hit $1.50.
Right. It actually hit $1.60. You see this right here? It hit a dollar right here, $1.62 right here. Okay.
Mm-hmm.
So did we hit our target of $1.50?
Yes.
Did we hit our target of $1.60?
Yes.
So this was a profitable trade right now. Does it have the potential of hitting $2? Let's go back. Does it have the potential of hitting $2? What do you think? Let me connect this pivot low right here to this pivot low right now. What is it doing?
It's going upward.
Right, starting its uptrend. And right here, look at this thing. This is called a gap right here. You see this right here? That's called a gap. So usually stocks tend to fill their gaps. So I put gap fill here. So I would remain holding the stock. Okay. Now, if the stock closes below $1.39 2 times, what do?
Sell it. Get rid of it.
And why is that? Because it's closing below what do we call this?
$1.39.
Right. And what is this called? The 20-day moving average. Okay. So now what we need for this stock to do is to close above this right here, $1.71 2 times, in order for it to get to $2. And this is called pattern trading. This is called proprietary pattern trading, proprietary probability trading, because we want to position ourselves in the most probable setup that's going to give us the best opportunity for profits. Okay?
Let me ask you a question.
Okay.
Let's say it hit target number 1, hit target number 2. Do we set up in the website for it to automatically sell, as we did for it automatically to purchase, or how would that work?
Yes, you would. If you come here, let me look at DN. You see here? Instead of doing the buy, you're going to hit sell. And let's make believe that you have 200,000, you have 20,000 shares, right? You're going to come here. You're always going to place a limit price. You see this? Limits. Okay? You're always going to use a limit price. And we want to sell it at, what price do you want to sell it at? If you come over here, what price do you want to sell it at?
At $2.
Okay, at $2. So you're taking on a little bit more risk, but you're saying that you're going to sell it at $2. You're going to come here. So you don't need to be in front of the computer. What are you going to do is you're going to place a good 60 days sell order. That means if this stock hits $2 within 60 days, you automatically sell. Okay, and then what you do is you preview order. I don't have the shares here, so I can't do it. Okay, but you would click preview order. And you don't have the shares. Okay, you wouldn't do it. Okay.
Got it. Now, when I purchase a stock, do I automatically put the buy in? Once I purchase it, do I automatically set up the sell?
Yes. Immediately after you buy a stock, you always want to set your sell order. Now, why do you do that? Because you don't want to forget it, and also you want to be at the head of the line before everybody else. Okay, it's like you putting a ticket, and that ticket is at the best place where the person that's going to buy it, you're going to be filled first. Okay, it's like you going to the Apple store because you woke up early and now you're at the head of the line. So you always, immediately after you fill, you want to set your sell order. Okay? So this is called small caps. Okay? Typically when you trade these small caps, you have to have larger amounts of money. You have to invest a little bit more because when it only goes up 10, 20 cents, okay, that's only like maybe 5, 15%. Okay. Now, the beauty of it is I also give you what you call OTCs. OTCs are penny stocks. Okay. I don't like calling them penny stocks because it's fringe. A lot of people, when they look at these penny stocks, what happens is um, they hear penny and they don't want to buy them because they feel that it's a scam. But with penny stocks, you can make a good amount of money. So every Sunday night, okay, I'm gonna post a new list, okay, and this is where you get it. You come here and you go on to the OTC weekly watch list, okay. You'll come over here and you'll click read more, okay, and then you'll have your list of stocks and the setups, your buy zones, your pivot, your breakout close. Okay, this is a good one for us to look at because this was sent out at 10 to 13 and this stock didn't do too well. Okay, so we're going to look at eHost right now. Now, the difference between these stocks is that they're trading a lot less and they're trading on the pink sheets, under pink sheets. Okay, these are pretty much new companies that that trade on the over the counter. Okay, that's what OTC stands for, over the counter markets. Okay, the difference between these guys is technically they don't have to put out filings or they don't have to release certain things that other indexes do, like the Amex or the Nasdaq. Okay, uh, exchanges. And if you look at our setup here, okay, the setup was to buy in this box pattern here. Okay, it was from 10 to 13, and our stop close was a close below 0.001. Okay, and why did we say that? Okay, because if you come over here, the stock was consolidating at these levels, and we felt that if we bought it near here, it was going to break and it was going to move higher. Now, what happened here? If you look here, this stock closed below 10 two times, 1, 2. So what did that signal to us? Let's go to if you would have bought in this stock, okay, at 10, let's say 0.001, see this 0.001 level?
Mm-hmm.
And you come over here, and the stock closed below 0.001 two times. Look, on the 16th and on the 17th, it closed lower. What would you have done here?
Sold. It was on a downtrend.
Right. Okay. So I want you to understand that concept. You have to be very, very disciplined when trading these stocks. Now, okay. BRNW, I sent this out, and I told my guys to buy between 17 and 23. This was sent out on December 15th. So BRNW gives you a brief description. This is a stock that's testing the bottom. The last time around, the stock rallied from 17 and hit a high of 49. Okay. Now, let me explain to you. 0.0017, that means that it's trading, okay, below a penny. Okay, so it's not even trading at a penny because there's a decimal. There's 0.0017. Okay, don't let this confuse you. Okay, because all it is pretty much just a fraction of what a penny is. And we don't care because if I come here, BRNW. Okay, let me show you BRNW, how I would set this up. BRNW, come over here. I want to buy BRNW I want to buy 300,000 shares. And we said that we want to buy it at 17, right? But I'm going to put 18 because I want to get filled. I'm going to come here, hit for 60 days. That's how much it's going to cost, $9. You see that?
Mm-hmm.
Okay, so all you're doing is Okay, you don't care about these decimals. You have to make sure that you place the decimal there. Okay, when I want you to always remember to place that decimal there. So we want to buy this at 18. Why? Because what is it telling us? The buy zone is between 17 and 23. So we want to buy it as close to this 17 as possible. Okay, so I'm placing my bid at 18 and I'm buying 300,000 shares. I'm putting good for 60 days because within 60 days, if this stock hits that level, okay, I want to buy it. And I'll hit preview order. And that says $549 there. Okay, so now let me go over the chart. Okay, what is this doing right here? It's in a box pattern, correct?
Yeah.
Okay, so we want to buy inside this box pattern. Why? What did we talk about the RSI? Remember I talked about the RSI? Is
Yeah.
it near the bottom?
It's going on the uphill.
Right, but at the same time, it's still close to the bottom, correct?
Correct. Yes.
Okay, good. So now our pivot break, okay, our pivot break is 003. So I'm saying if this stock closes above 3, the breakout, it could hit 49. Okay, in order for this stock to be what you call bullish, meaning that people are going to feel confident buying, is if it closes. And now our stop close is a close below 17, 2 times. Okay, so if this stock closes below 17 2 times, what are you going to do?
Yeah, get rid of it.
Get rid of it. Good, beautiful. Now,
Now,
let's go over here. Let's look at the BRNW.
I have one question before we move on.
Okay.
Oh, you provide a list every week on Sunday night for the following week, correct?
Right.
I've seen that you give various choices. Which do we go with? One? Do we go with the others? One better than the other?
Okay, you have to decide on what stock you want to get. What I usually do is I get the one that's pretty much the cheapest that I can get. Okay, and also what I do is I kind of research what that company does. Okay, or I research how many shares the stock is trading. Okay, because that brings liquidity. Right, so there's a couple of things that you have to take into consideration. But overall, I'm giving you a nice handful of opportunities. Okay, they're like M&Ms. They all taste like an M&M, but at the same time, okay, you want to get the one that's the cheapest. Okay, you want to get the best position that you want. Okay, the reason I give you a couple of positions is because there's some trades that you may not be able to buy it at the price that you want to buy it at. You understand what I'm saying?
Mm-hmm.
So with more choices brings more opportunity. Now, does that mean that you have to go for every stock in that list? No. Okay, pace yourself. Okay, I want you to pace yourself. Okay, now let's look at, does that answer your question?
Yes.
Okay, so moving on, this was sent out September 12th. Now let's look at September 12th, it was sent, and would you have filled? To show you a line, just because I want you to see where this line hit. This is 17. Okay, this line represents 0.0017. 0.0017. Okay, you see that line? That's 0.0017. Do you think you would have been able to fill between 17 and 23?
Yeah.
Okay, right. If you would have put in your bid at 18, 19, and 20, you would have filled. Now, on the 17th, look what this stock did. It hit a high of 49. Okay, 17 to 49. That's 17 to 49. That's over 100%. So let's say you come back, your what's it called? Let's say that you would have bought in $549 worth of shares and you sold it at 49, you would have made 100%, more than 100%. Okay, you would have made, okay, over 100%, close to 200%. Okay, because if you look here on the 17th, it hit a high of 49. Now, depending where you sell, it's entirely up to you. Okay, you're not gonna ask me. You're pretty much you're gonna set profit margins for yourself, and you're gonna set your sell orders. Okay. Now, if you would have bought in this stock at 18 and you would have filled, what would be your next step? What would you have done?
What I would have filled, meaning I would have.
You would have gotten your order in, and you would have filled at $549 at 18 on the 15th. You would have filled. What's your next step? If you check your account, if you check your account, and now you have this stock and you own it, what's your next step?
Setting up the sell.
Beautiful. It's exactly correct. Okay. So this is your entire list. Okay. These are all your stocks that we post. Okay. So this is what I call the weekly watch list. Now, sometimes you're not near your computer. Okay. You're not near your computer. Sometimes what happens is your people are at work. You don't have time to see what the price is doing. And I understand that. Okay. The beauty of it is we have services here. Okay. What you're going to do is everybody has a smartphone now. Okay. See this? This is a smartphone here. Okay. It looks like an Apple to me. I'm not sure what it is. But what you're going to do is you're going to post your email. You're going to post the username that you use, Sniper999, and then you're going to place your phone number here. Now, if BRNW hits 18, guess what's going to happen? You're going to get a message on your phone. And it's going to tell you BRNW is at 18. Now, am I telling you to buy it? No. But I'm sending you an alert that the price has triggered that buy zone. Okay? And that's going to get sent as if your girlfriend's sending you a text message. On that text message, okay, it's going to give you a link, and you click on it, and guess what? You're going to get the chart. And it's going to tell you the buy zones. Okay? So we're making it very easy for you to function. Another beauty, okay, of the service if you come here and click on this, we have a mobile app. Okay? So when that stock triggers, okay, you're going to get a notification, a pop-up. And then this is going to come out. And it's going to tell you the buy zones and the setup. Okay? It's going to be like, you ever receive a message on Facebook? You understand what I'm explaining to you?
Yes.
Okay, so we're making it easier for you guys. Okay? So what you do is, all you have to do is log in, okay, using your username and password, which you use, okay, same login. Okay, and then what you do is you click the login, and you can also check this to always be logged on. If you're always logged on, you're always going to get, whenever something hits, I don't spam on this. The only time you're going to get a message is if something triggers. Okay, you're going to get a ringing sound, okay, or a bell sound, like the stock exchange. And then at the top over here, you're going to see this symbol. What you're going to do is you're going to lower it and you're going to click on it. And then from there, you're going to see the setup. Okay. Also, you'll be able to look at the weekly watch list. You'll click on the link and then you'll be able to see what we're watching for that week. Okay, so that's the functionality for the app. Okay. Let me just go back to the radio silent play. So that's your OTC, your option triggers, okay, and the small caps. The option triggers I'm not going to go over, okay, because you're not there to fully understand the options. But this is pretty much what we bring to the table. Now, long investment, like you mentioned, what if I want to invest in certain stocks? What I do is I break it down into the stocks that I feel are going to give the most potential. Okay, so I'm going to show you just some of the stocks that we've mentioned. Okay, if you look at EPZM, okay, this was a stock that was given. EPZM, I said to buy it at between $20 and $21.50. Okay, back in December 3rd, 2013. If you look here, it was oversold, and I actually like the company. Okay, based on their early stages of leukemia, a drug that they were coming out with, it was down 43%. Okay, and I felt that this stock had potential to trade, back to $27.50. This was a longer term stock hold. Okay, and this was back in December 3rd of 2013. Now, I want to show you this. So EPZM, we said buy it at $20 to $21.50. EPZM. Okay. We're going to go to the weekly because it was back in 2013. Okay, we bought this at what price did we say? $20 to $21, right? Back in 2013, that was right here. Now, would you have filled? Would you have gotten filled over here? Okay, so EPZM, we said to buy between $20 and $21.50. Okay, and this was December 3rd. Okay, and this is December right here. Okay, now, would you have filled?
Yeah.
Right, you would have been able to buy this as low as $18. Okay. Okay, so you would have filled. Now, the stock hit a high of $40 in January. Now, let's go back here. What was our target?
25.
25, and we said that the target could have been 27.50. So our targets were all hit on this stock. Okay, so these are the my members. This is another one I said in November 5th by the ROSG at $2.10 to $2.50. Let's go back. Okay, back in November 2003. Okay, we're going to come here. This is the weekly. We said to buy this in November 2013. That's over here. November and December. Look where it hit. You see that? So this was trading between $2 and $2.50. So would we have been able to add this price at the price range that I gave to you guys? $2.10 to $2.50.
Yeah.
Okay, great. And what was our target? Target was $3.50, and our target 2 was $4. Okay, our stop close was below $2. Did the stock ever close below this $2? This is $2 right here. Did it ever close below this line?
No.
No. In March of 2014, what did the stock do?
Went up to $6.
$6. From $2 that you could have bought it, it hit $6. That's close to 200%. If you would have put $5,000 in this stock, you would have had a profit of $10,000. This is the long investments that I give my members. Okay? So this is a case what we're offering our members. And right now, if you come over here, we're offering our fee of a monthly $39.99 and our yearly of $249 a year. Now, with the stuff that I've been teaching you today, one-on-one webinar for our members, okay, the weekly watch list, long hedge stocks, okay, the options setups. Do you think that this service is worth what we give our members?
Of course, it is. You're investing in yourself.
And you're making, and what we talked about, the law of infinite return. We're putting the less amount of money to make an infinite return. Okay, and you can trade OTCs, you can trade options, you can trade the small caps, and you can trade the long investment hedge. Okay?
Yeah.
So this is pretty much what we do. Okay, Sunday nights, you see this webinar that we're having at 9:15 p.m. We have a webinar for our members. Okay, traders that do this plan right here at $39.99, they're able to sit down, get on the webinar, and do a webinar with us where we go over the weekly watch list, we go over the option triggers, and we'll go over the small cap buy zones. Then after that, we'll have a Q&A where they're going to ask us a few questions on stocks that they're looking at. And I myself, as a mentor, will give them my humblest opinion on them. Okay?
Yeah.
And that's Sunday nights at 9:15 p.m. Okay, over here, we have training videos. Okay, that I've posted and I update it. Anytime I see good training videos, I post it for my members. We also have training books that I recommend people to actually read. What I do is, for our free services, I go over the stocks that are actually winners. And I pretty much tell you how they were alerted or how they were mentioned. We also have a chat room via Skype where I send updated alerts and updates. Okay, and I recap on the date that it was sent out and the date that the stock actually hit our targets. Okay, so everything is archived nightly, so you guys can see the stocks via email updates. Okay, and that gives traders more confidence in holding or letting them know whether a stock has stopped out or has broken pivot. Okay, I don't do this to gloat. I don't do this to say, "Ha ha, look, I told you so." This is more for traders to see how the stocks were set up. Okay, and the duration of time that it took. See, from here, July 7th to August 29th, okay, it was over a month that the stock, okay, gave an opportunity to hit 15 and it hit a high of 42 for 150%. Okay. So we have that for the Amex as well. Okay, it tells you the dates that it was sent out and where it triggered, on what date and what price it hit. Okay, if you come over here, same thing for the option setups. It gives you the winners. Okay, and it shows you how it was set up. Okay. So now, any questions that you have for me?
No. Now, all these alerts you can get via your app, right?
Right, right.
Oh,
We just recently released an app for Android. Okay, and you can download it through the Google Play Store. Okay, I understand that there's some people that don't have the Google Android. If you don't have it, you still have the opportunity to set up the SMS where it'll be sent to you via text message. Okay, and the only difference there is that it's not an app. Okay, now we will and we are working on an Apple iOS, but this is the thing. Okay, a lot of people don't understand that there's funding needed to get these tools out to you guys, and creating an app is not a cheap thing. And currently, if you look at our app, okay, I want to just show you because I don't want people to. We need the support from you guys, okay? And some of the things about this website is that we spend a good majority of money to get the best product to you guys. Okay, if you look at it right now, installs where so far we only have 10 to 50 installs, so it's not much. So if I don't see any, if you look here, okay, we have one, two, three, four, and five reviews. We have over 80 members, and we only have one, two, three, four, five reviews. If I see not in the app, I'm not going to invest in another app. You understand what I'm saying? And this is more an overhead, and we want to get the best product to you guys. But at the same time, if I see that there's no, interest, or there's nobody really looking to use the application, or they're not really posting any information, then I probably won't. I won't do the iOS app. You know what I mean? But that's about it. So um, I really want to thank you also for giving us the opportunity to record this. I'm actually going to probably post it on YouTube, okay, so traders can see the type of one-on-one webinar that we give our members. Okay, it's very important for you guys to understand that trading, okay, requires strategy and discipline, and also patience. Okay, that's one of our mottos: patience plus discipline equals profit. And it's very telling because it may sound corny to some people, but if you're disciplined and you're patient and you treat every stock the same way, the likely of you making a mistake is less. Okay, and what I notice about a lot of traders is that they tend to be all over the place, and they try to force trades. They're looking at different websites. They're going and they're trying to do too much. Okay, I believe in small and and slow and steady. You know what I mean? RSP Sparta strategy. Okay, I want when you get a chance, I want you to look at that. I have a strategy here. I call it the rule of three, and it explains to you how using this rule and starting with $300, as low as $300, can make you, you know, significantly profitable. So when you get a chance, I want you to read this. Okay, and this is
Okay.
called the Sparta rule of three. Another thing that I posted here is trading tips. Okay, treat your trading like a business. Okay, and I'll scroll down. You could scroll down, and it just gives you um, a little bit more information. I don't want to scroll down now because I want traders to read it, and this is for your guys viewing only. You guys are paid members, so this is a privilege for you guys. Another one is trading with emotions. This is what I call the ten commandments of trading. When you get a chance, read them, because I think that these are mistakes that traders make a lot. All right, they tend to make, and read them and don't make those mistakes. If you don't make those mistakes, you're going to become a profitable trader. Okay, and the SOP, standard operating procedures. This is pretty much our strategy here. And you can read it when you get a chance. I recommend that you read it. It gives you the steps of what we're trying to achieve here, and what the strategy is. And I'm not going to go over it because again, that's a privilege for you guys, and that could be found on articles. Okay.
All right.
Okay, so Sniper 999, I really appreciate your time. And if there aren't any more questions, okay, I will keep in touch. I'm going to send you this copy so you can review it at any point. You want to rewind or you want to kind of look at tips so you can have it for yourself. I highly recommend it, that you save it and you store it. So, you could use it. And any questions that you ever have, you can always, send me a message via, you can actually call me. Just set an appointment. All I ask is to set up appointments. You can email me at radiosilentplay@gmail.com. Okay, and you could also do a live chat. You can click here, and you can send me a message. And whenever I get the message, I'll just email it back to you. Okay?
Okay. Thank you.
Okay, great. No, you're welcome. And welcome to the team. And looking forward to your timely success.